Alrighty, check, radio check. I want to thank all of you for taking time out of your busy schedules. Missed you last week. I was in Arizona for my final trip of the year. Partners meeting with Simplicity went really well. And again, um, I'm glad to be back, and it's given me a chance to reflect a little bit on how we're going to end the year and then how to prepare for 2024. So this week's call is, as we do every month, is sort of a rear view mirror of the markets. And before we go, and on the last slide, before I turn it over to my RIA stuff and disclosures and all that, I'm gonna go off slides and ask a favor from everybody. I'll bring that up at the end and show you what I'm gonna do. So thanks again for hopping on. And without further ado, let's get started. So, the markets actually for the month of November did really well, and real estate seems to have taken the lead. That's the green here at 12%. One of the things that my investment team has started to do now for me is to take the values and actually post them. So now we're looking, and not, although it was to the side, now we can sort of look at it and it's a little cleaner to me, so I like this adjustment. But overall, November was a good month. And then as we look at, that in comparison, I'm getting some people coming in, so bear with me. So as I compare, like I always say, so although it's good news, I can't take credit for it, but I do like to compare it to how is it doing in comparison. And this, I thought, was very eye-opening to me because, if you had asked me in January of this year if I thought the S&P would be up almost 20%, I would have said no way, right? We are definitely running for a recession. That was all the pundits were sort of forecasting that. But the S&P has had, I mean, it hit all-time highs today, right? And that's because of dovish views from the Fed saying that, it looks like they may entertain rate cuts in 2024. So, I've been reading a few financial articles, looking at a few analysts, and there is a mixed opinion for 2024. But I was actually pleasantly surprised to see that a majority of the economists and analysts were suggesting that 2024 will continue to be profitable, and actually that we've had a soft landing, as they called it, a soft recession, and that we've already sort of experienced that. So, again, this is why being and staying diversified in the markets is so important, right? It's if we get skittish, if we get in and out, many studies have been shown that we can't time the market, but we want to try and capture some of this in a reasonable fashion without necessarily putting our portfolios, especially our retirements, at risk. So again, I thought this was promising news. And then as we get into the three Wiseman, the indicators, right? It's continued to has a green line, and just for the SMA, right? This is a moving average indicator. It's a momentum indicator. It's a crossover, right? The RSI is a relative strength indicator. It's sort of like the speedometer, right, of how the economy is doing. And then the MACD crossover is also a momentum indicator. And these indicators sort of say, hey, they're like signals on your dashboard of your car, right? If something, if a yellow light goes off, you want to stop and check it. If maybe you have low air in a tire, maybe the oil needs to be changed. If a red light goes off, and that's where these red lines, then you want to get it into the shop, or you want to start to reevaluate before you have correction. So overall, we still have a green line on equities, right? So now we're going to shift over to what do we have here? We have the month of November for bonds. And again, it's a breath of fresh air to see yields, now the treasuries at 9%. And you go, oh my God, but we can't time the market because when you look at the next slide, you go, oh yeah, that was a dog all year. So it makes sense that it recovers and that you're going to have months like this. But I think that my takeaway as we get to the next slide, excuse me, as we get to the next slide, is that the purple, right, is was the US aggregate, right? This is the US bonds is 1.89. And it's not, bonds in the US is not really the safe haven yet. And I think if 2024, if they start to cut rates, right, then you will start to see that bond portfolio prices will go up, but the yields may come down. So it's always a seesaw game. But Europe, right? This is that line green, right? Vanguard Total International Fund is actually seems to be healthy right now. So, having diversified portfolios and having balance between equities and bonds, and if not bonds, bonds alternatives, these are things that we've preached before. But this is what I was saying, even though the hot pink, right, is was the treasuries, the 20-year treasuries, you could see that although for 1 month it did good because it's come off a real bottom, right? So that's why the 9% in 1 month, but overall, if for the year, might have started off okay. And then there's a lot of action throughout the year. Treasuries and government bonds didn't do so well. But we have activity and this just goes to show you that this sort of reflects right around what was going on in Israel at the time. So, global and geopolitical arenas do play and weigh on the equities markets and the markets in general. But this is why you can't panic. You can't listen to the gloom and doom of the talking head on TV. You got to have a strategy. You got to say, hey, it's okay to make adjustments, but they shouldn't be reactionary, right? So I've had quite a few phone calls with clients over the last 2 or 3 months and saying, hey, here's a tactical suggestion as to why I'm moving, right? Not because we're panicked, right? We're just saying that we think that a reallocation into this type of holding might make better sense. And I will continue to follow that philosophy on a go forward. And now as we get to the next screen, right, that we're looking at, that we've had a little bit of up and downs with the bonds, but you're going to see this choppiness in the bond market. It was all right, green light, red light, green light. And so it could very easily shift over to red light again. So, we're constantly going to be looking at the markets, but overall, good news. And that brings me to the recession probability analytic tool, right? The RPA 12-month forward. And remember, 50% is anything over 50 means a recession is on the forecast. And we were pretty high. And then it backed off. So I'm not saying we're out of the woods yet. And again, a lot of things could influence it, but I feel much safer heading into the Christmas and New Year's, feeling that, 401ks should be up, your IRA balances should start to recover, your holdings, your brokerage accounts, all these things should be recovering. And then, I've been getting a lot of calls where, and keep this in mind, we will start to see a tapering of the offerings at the bank. So, some of the high bank yields, I was in the bank today and I saw a CD, and it's reasonable, it's attractive. And I'm not here to compete with the banks for short-term money. But there are options that we have at Professional Planning Services. We have a holding in a series of brokered CDs if somebody wants that 1 year, 13-month, 18-month, 24-month, and we can certainly look at those as an option, right? Or something that principal protected notes. I haven't talked about those lately, but basically they're the guaranteed principal, and then you have a cap. Right now I think December was 7.5%. So you can still be in the market, guaranteed no loss of principal, and have some upside. So these were all things, like I said, as a bond alternative, right? If you're looking for a little bit of safety, you got some money sitting on the sidelines, you'd like to take the opportunity to get some yield, but necessarily no risk, you should reach out to us and let us know. Now, before I go into my close, this is where I would ask everybody that's on this call that's watching. I don't normally ask for help, but you may recall that recently I did a occurrence video on, it's a platform that we're promoting. And I would ask you, if you have a LinkedIn profile, this is my LinkedIn page. I would ask you to go to LinkedIn and look me up. And then when you get to this page, scroll down until you get to this activity. This activity, I want you to look for that little video here that brings up where I'm being interviewed by Aaron Kennedy. Aaron Kennedy then, right, interviews me about the Currents platform. You can watch it, it's a 10-minute video. But really what would help, I think a lot of people to take advantage of this is either A, like it, right? B, if you can actually share it, right, and send that, that would be very helpful. Because again, these algorithms that people put in there, this is what they look for. So if you can go on, comment on it, give me your honest opinion. This will help the community. I have a lot of connections, and it'll help people. I'm working with a lot of families that I help their students go to college, that have now graduated college and are looking for a way to save for the future, to maybe a better strategy. I would strongly encourage you to have them reach out to me. Set up a time to have a 15-minute call. It's not a sales call. I'll take them through an exercise, a cash flow exercise that can be helpful. And this is for anybody that still has an earned income. If you've already retired, then this is probably not a strategy that I would suggest or promote for you. But if you have a desire to sort of get out from the hamster wheel, the rat race, and start to actually get your arms around some type of accelerated savings account, Currents is a great platform. It's all about it in here. I would encourage you to do that. So with that, I'm going to bring up the final part of the slide so that I have my compliance in order. And that's our tape. The next week, we're going to be, we'll probably, I was talking to Caitlin about it, and I think the next two calls, next week, we're going to be talking about, Christmas, peace, and charity, right? Giving back to those in the community. We've always promoted Elijah's Kitchen. We're looking at, the Red Cross, maybe to help some of those less fortunate, and just that's what the call is going to be. So make sure you join us. And if for whatever reason I don't see you next week, I want to wish each and every one of you, I am not afraid to say it anymore. I say it loud and I say it proud. Merry Christmas, right? From the bottom of my heart, from my family to yours, we want to wish you all Merry Christmas. So thank you very much. Thanks for taking time out, being on the call, and look forward to seeing you again soon.